Good day, everyone. I welcome you here. Today, we'll be talking about Broker, Forex Broker 101. In our previous lectures, we've talked about introduction to trading. Then we talk about what Forex is, what is financial market. We discuss major currencies, major pairs. Then we talk about crosses and buying and selling pairs, what we have to understand about those ones. Then from there, we move on to how Forex is traded and other basic things you have to know today. So today I deem it that we need to know what is Forex Broker, and we need to understand what Forex Broker is, so that at least we'll be able to increase in knowledge and now of operation in trading world. So Forex Broker 101. The first step in the real world of Forex is opening an account with the Forex Broker. Here is what you need to know before you choose a broker. Now we've been talking about what Forex is, how it's being traded, what to expect, this and that. But you cannot just be doing this on your own. You need a broker. And like we said here, the first step in the real world of Forex is opening an account with a Forex broker, because you cannot actually get anything done without having any account with a broker. So who is a broker, what is brokerage, and all those stuff. We'll be discussing everything here, so that you have understanding and what you need to do, and you are progressing to the level of where you know how to put money in the Forex market and begin your trading journey. So let's start. What is Forex Broker? A Forex broker is a financial service company that provides trader access to a platform for buying and selling currencies. They provide trader access to a platform for buying and selling foreign currencies. A Forex broker may also be known as a retail Forex broker or a currency trading broker. A Forex broker is a financial service company that provides traders. They are financial service company that provide traders. We as a trader, they give us access to a platform where we can perform all our buying and selling of foreign currencies. This is what Forex broker is. Even though that word broker still has deep meaning, but at least we can still hold on to this, just to give us the basic knowledge and understanding that we need to know about Forex brokerage. So understanding the Forex broker. The foreign exchange market is by necessity a global and a 24-hour market. It's by necessity a global and 24-hour market. It's not something that is done in Nigeria alone. It's not something that is done in Africa alone. It's not something that is done in Europe alone. It is all over the world. It's a global market that opens 24 hours, 5 days a week. So the clients of the Forex broker include retail currency traders who use this platform for speculation on the direction of currencies. Their clients also include large financial services firms that trade on behalf of investment banks and other customers. So we are, just talking about understanding what Forex brokerage is. The clients of the Forex broker include retail. We are just coming with a little money. We are retail currency traders. We use this platform for speculations on the direction of currency. If you predict that you are buying and you are predicting that the price of whatever currency or whatever trading instrument you are using is going up, you are making speculations. You need a platform to actually execute that speculations for you. So that's what Forex brokers are doing for you. Any individual Forex broker firm, we handle only a small portion of the volume of the overall foreign exchange market. So like we said, it's a global market. And Forex broker exchange is by necessity, we only constitute little, and they give us platform to let's move forward. We will continue to gain more understanding. The role of a forex broker. The role of a forex broker. Most foreign exchange transactions are between pairs of the currency of the 10 nations that make up the G10. The nations and their currencies include the US dollars, the euro, the pound sterling, Japanese yen, Australian dollar, the New Zealand dollar, Canadian dollar, and the Swiss franc. These are the major currencies that have been traded in the forex market. Then we are talking about most foreign exchange transactions are between pairs of the currencies of these major 10 nations. So most brokers allow customers to trade in other currencies, including those of emerging markets, like South African rand, what is it called? Russian currency too. They are all being traded. Some brokers make available those currency pairs so that you can be able to trade them through their platform. Not all, but many of them. Using a forex broker, a trader opens a trade by buying a currency pair and closes the trade by selling the same pair. For example, a trader who wants to exchange euro for US dollars buys euro USD pair. This amounts to buying euro using US dollars. If you watch previous videos, you will understand. You will understand what this statement is talking about. So, if you want to open a trade, your predictions, your speculations in the forex market, they are all executable through forex broker. Without them, there is no way you are just doing analysis. You will not know where to place your buy, where to place your sell. But forex broker make those things available for us. They help us in actualizing our speculations. If you want to buy, you are buying through them. If you want to sell, you are selling through them. So to close the trade, the trader sell the pairs, which is equivalent to buying US dollar with euros. We are still explaining and buttressing this point. So if the exchange rate is higher when the trader closes the trade, the trader makes profit. If not, the trader takes a loss. This is just explaining the activities that we are engaging. Not just that you are expecting profit always, or you just believe by opening a trade with broker, you are meant to be profitable. No. Yeah, you have to know what you are doing. That's the preceding lectures. That's what they are for, to give us awareness of what is actually happening in the forex world. And now, here is talking about how to make money and how to lose money, because they are happening simultaneously in the market. If you are buying and you are speculating that the price from the point where you enter into the market, the price of the market will be going on from that point. And you are actualizing your buy through the forex broker, and the price actually goes up from where you are speculating from the point of your speculation. Then you are expected to make profit through them, and they will deliver your money for them. But if the price take a turn on you and comes down from the point in which you are speculating the price to rise from, then you'll be taking a loss. So that's what these three statements are telling us. Then opening of a forex account. We are progressing, and I believe many of us will be happy from here. You want to open an account now to begin to learn more, see how things are done in the market, and progressing. So you want to open a forex account. Opening a forex trading account these days is quite simple. It's very, very simple. Technology is actually bringing all this simplicity to our doorstep and can be done online. All you need is your phone. Before trading the forex market, we require a customer to deposit money into the new account as collateral. So the forex broker will require a customer to deposit money into the new account as collateral. So not just open an account with them without depositing money. That's what you use in making money through them. So brokers also provide leverage to customers so that they can trade larger amounts than they have on deposit. We discussed leverage in our previous videos. What leverage is? Brokers provide this leverage to permit us. We trade in units, and the lowest unit is 1,000 units, which is the micro lot size that will be traded here. And forex markets move in pips. It is actually this unit, buying in units is what actually helps us to make enough money in the market. If you are not buying in units and you just come with your $1, $2, $5, how much are you expecting to make through that? But buying in units, micro units, mini units, and standard units, which is 100,000 units. So this is the accumulation of all these things that help us to accrue profit or loss in the market. So they provide us with leverage so that we'll be able to trade larger amounts than what you are depositing. No, I don't know. You may be rich enough to deposit $10,000 into your account, and if you do that, you'll be able to trade only 1 million lot size, which means you'll only be able to buy 10,000 units of one particular currency. And this leverage is what helps us to maximize our money, that enable us to be able to trade larger amount of money, because the price differences between all the pairs that we are trading are very, very low, very little. They move in pips, and there is no way you'll be able to make your money in pips without using leverage. If you have enough money to put on there, then you are good to go. But depending on the country the trader is trading from, the leverage can be 30 to 1,000 times the money available in the trading account. Like I explained the other time, understanding leverage, the leverage that your broker is providing for you, either from 30 to 1,000. If they are providing 30 leverage to your account, then definitely any amount of money you are bringing in will be multiplied by 30, so that you'll be able to use that power of 30 to trade and have access to many lot sizes. Then if you are using 1,000, then your money will be multiplied by 1,000 to provide you the capability of trading such. But there is higher leverage, like it is written here, higher leverage make forex trading very risky, and most traders lose money attempting it. It is a two-edged sword. It's not only make you lose money alone, it can also make you it can also help you to make a lot of money too. Because if you are coming into the market with smaller account size, you'll be able to use leverage to multiply your money power. Then you'll be able to do what? To make money or lose money. But one thing you have to keep in mind is Forex Broker will never allow you to touch their own money. So if you are using leverage on your account, you have to have deeper understanding of what is happening in the market, and that's the reason why we are here. And this is the reason why I always telling my students to be cautious. They have to seek knowledge and understand it first before they even try to engage in the market, because trading is not a get rich quick scheme. You can actually get burnt and lose your properties there if care is not taken. So that's the reason why you need to have all this understanding. And that's the reason why I always stress us to go through all this rigorous learning. So let's move forward. How forex broker make their own money. Then if we are talking about forex broker making their, why is it not showing yet? How forex broker make their money. Forex broker are compensated tools. We talk about forex broker being the institutions that permit us to be able to actualize our speculations in the market, because without them, we don't have access to the bigger market. So they are the ones that provide us with that access. But how do they make their own money? Are they just doing all these things for us free of charge? No. They actually have their own way of making money too. because they are in business for profit, for sole reason why you are trading too. So we have to understand the reason why, how they make their own money too, so that you know, because it is through you that they will make their own money too. This having broker knowledge is even much more than what I am letting you know here. We have a lot of things. You can do a deeper research into them because they are the ones they can make you or mar you. But you know, many people are overwhelmed with much talk and they don't want to pay attention to this low, the basic knowledge that we need to know. So that's the reason why I'm just briefing all these things for us. So let's see how they make their own money. Forex brokers are compensated two ways. The first is through the bid and ask price of the currency pair. I've told us in the past that we trade forex in pairs, and the first way they make their own money is through the bid and ask price. We've discussed that in the previous video. If you still don't understand it, check the previous videos. For example, when euro US dollar pair is priced at 1.20010 bid and 1.20022 ask price. The spread between these two prices is 0. I mean 0.0012, known as 1.2 pips. When a retail client opens a position at the ask price and later closes it at the bid price, the forex broker will collect that spread amount. They will deduct this 1.2 pips. The actual amount, we traded in units. They will deduct this unit from your account immediately. That you are in winning trade or losing trade, that one doesn't concern them. They will deduct this. Either you are buying or you are selling. This is their own commission on this is their own, what is it called? Their own way of making money. Secondly, some brokers charge additional fees, which is commission. They earn commission through your lot sizes. Some charges a fee per transaction or a monthly fee for access to a particular software interface, or fees for access to special trading products such as exotic options. Just commission or whatever. That's the second way of making money. They charge you through spread between ask and bid price. That's one. The second one is through commissions on whatever services they are providing for you. So competition among forex brokers is currently intense, and most firms find they must eliminate as many fees as possible in order to attract retail customers. Many brokers, we have a lot of things we need to understand. There are different type of brokers out there. We have A book brokers, B book brokers, we have C book brokers. But going into all those details will burn us out. So there are a lot of competitions out there, and we are their products, and they make money through us. So as competition is increasing, it's actually into our favor because we now have like this Euro USD, which 1.2 pips is being charged. We have those that charge as low as 3 pipettes, 6 pipettes. But this competition is actually working in our favor, and a lot of charges have been eliminated. Some forex broker also make money through their own trading operations. They trade. They can, if you are a good trader and your forex broker see that you make a lot of profit, they can pick up your trade through their own platform. They are seeing everything over there. They know who is profitable. They know who is not profitable. This can be problematic if their trading creates a conflict of interest with their customer. Regulations have curtailed this practice. We don't need to worry about all these ones. There are regulations in place that cater for all those things now. So let's talk about regulation of forex broker. The industry is regulated by Commodity Futures Trading Commission, CFTC, and National Futures Association. Anyone considering opening a forex account can research the available brokers through NFA website. So what are my recommendations? My recommendation, I'll be giving you a broker that you can use, a reliable broker that I've been using. Just save you the stress of researching all of them. They actually give a very good spread as far as I'm concerned, and depositing money with them. They have their presence in Nigeria and all over the world. And you can actually open account with them, deposit with them. It's easier. So I'll be recommending them. In the group, I'll be dropping my referral link. Just click on the link, register with them. I will also forward how you can download their application and everything. But sending, you will have to, after your registration using my referral code, do the screenshot so that I can post it in the group and I'll be able to put you through on how to get everything set up. So if you are seeing this on YouTube or any other platform, I'll be adding it under the description unit of the video. So my recommendation, I'll be posting it in the group. You have to like be cautious with whatever broker you are using because we have a lot of them that are trading against you. If you are buying, they are selling because they know you are not that fully aware of. But they know beginners, they know experts, and they have their own way of monitoring accounts. So you have to just be careful out there because some brokers are not well registered. They are just there doing business without proper certification. So I'll be dropping my own. It's not necessary that you follow my own something. You can find your own broker, but at the same time, for you to be in safe hands, you can just register to my link and we are good to go. I'll be stopping here. So next video, we'll be talking about different way of analyzing the markets and we'll be proceeding so that little by little we are progressing to chart and our analysis skills will be increased. I'll be stopping here. Thank you.